So welcome, everyone. My name is Deborah Gallant, and you are at a program being presented by Entrepreneurs Forever. We run this program called Forever Forward, and I try to find a topic that's pretty fundamental to small business and present it. Frequently, I do it on my own, but today, actually, I'm delighted to have a guest specialist because credit is a very complicated topic. And I know what I don't know. And I don't know how, if you're not starting with good credit, it impacts your business. And that's why I have brought Amber Book in as our guest presenter. So let me just get us started. Amber will tell you a little bit more about her background and the Pittsburgh Financial Empowerment Center. As I said, I'm Deborah Gallant. I'm the Senior Program Manager at Entrepreneurs Forever. We'll introduce ourselves. We'll talk about the program, and then we're going to have a chance for you to ask Q&A. One of the great things about our programs is that we record the presentation part, but we stop recording when it comes to the Q&A. So you should feel free to ask questions that you want to ask of our guest expert. I will do our disclaimer. This presentation does not take the place of professional advice from your own paid or unpaid advisors. It's meant to be informational and help give you some direction. So Elise and Manda are joining us. Actually, Manda said she's not feeling well, so I think we're just going to move right along. But welcome wherever you found us from. Entrepreneurs Forever's mission is to equalize opportunity by connecting often overlooked small business owners with the peers, skills, and support they need to succeed. Because I never, ever have time to come back and tell you about upcoming events, I've started telling you about them before I get into the program so that you know what's coming up. We're doing a member panel on e-commerce next Wednesday from 11:30 a.m. to 12:30. I blew up my sales by going online. And then we're doing a deep dive on valuing your business on Monday, September 18th from 4 to 5:30. That program is called a deep dive. So why are we even coming up with this topic? Well, as the owner of your business, your personal credit history will have a substantial impact on your business. It's not like you can just leave your own history behind. It matters. If you need to borrow money, lenders are going to check your history. They're going to check your score. And if you have a less than perfect credit score, it can quite change how your business gets handled, the rate that you get charged, how that works, because it's a perceived risk on the part of the lender. And I just want to make the point, because Amber is going to talk about your personal credit today. Your personal credit and your business credit are not the same thing. But if you're the owner of your business, the business loans are likely going to look back into your personal history. And if you don't think about that, or, a bad credit card decision you made when you were in college, those things can come back to bite you. So that's why we have put together this program and brought in an expert. But even if you've been told your credit is bad, you can make it better. And so Amber's going to talk a little bit about some of the things that you can do to make it better, as well as where to seek help if your problems and issues go beyond what you can actually learn in this quick webinar. One question I get a lot, especially from younger entrepreneurs: what if I've never established credit? I have no credit history. I lived with my parents. I went to college. I just graduated. The answer is go establish some. Find some places, even if it's a securitized credit card or whatever, show that you have a history and pay it back. Because somebody with a blank slate, I don't know, Amber will have to tell us whether she thinks, is it better to have a bad credit history or no credit history? I don't know, but they both probably don't help you. So if you're looking for help, and I think this is just an important slide before I do the handoff to Amber, there are lots and lots of people out there. You can see them on your Facebook feed, you can see them on television saying that they will help you repair your credit. And there are different organizations with different motivations that do this, including people who will take money from you or a commission on what they can negotiate your debt down and all the rest, it's critical that if you are looking for somebody or help in any way, that you understand who is helping you and why they are doing it. Now, with that as the setup, I'm going to tell you that we've brought in somebody we think is impartial, doesn't have an axe to grind, isn't trying to make money off of you, to tell you sort of the real deal about how credit works. So I think Amber's organization, and she'll tell you a little bit more about the Financial Empowerment Center and what they do, is an objective third party to help you. But remember that all the people who claim to help you may not have those same motivations. So I am going to stop sharing now, and I'm going to let Amber take control and share her screen and hopefully introduce herself, tell you a little bit about the Financial Empowerment Center and herself, and then leap into the topic of your personal credit.
Okay, I was trying to figure out how to. Oh no. Okay, here we go.
All right.
I got it. If it, there we go. Maybe. I don't know what it's doing here. Okay. Okay, here we go. I'm sorry.
No worries.
I don't know what's happening. Okay. It's Friday morning, right? All right. Here we go.
I'm not seeing your screen yet.
Oh, you're not?
Your screen, the bottom.
Share.
There we go.
How are we doing now? Okay.
Excellent.
All right. You know, no matter how many times you do this, it's never it's
all
never
good.
easy. Okay. Yeah, like I said, Deborah said, thank you so much for having me, Deborah. My name is Amber Book. I am the program manager for the Financial Empowerment Center. The Financial Empowerment Center is an initiative that is put forth by the Cities for Financial Empowerment. They are based in New York. They decided that everybody, that financial counseling and financial coaching needs to be given as a public service. Like, nobody should be denied the right or the access to financial counseling or financial coaching in order to understand your finances. So that's kind of where their model came from. So in that same light, everybody is welcome at the Financial Empowerment Center. There are no income guidelines. There are no restrictions. You just have to be over 18, but other than that, like, we really accept everybody. So we help people with no income, and we help people with, that are making six figures, honestly. They both sometimes have the same problems. So that's kind of where we're at with that. And the Financial Empowerment Centers can be found across the country. There are 32 and counting Financial Empowerment Centers, mostly in major cities. We are based in Pittsburgh, but you can find, you just go on the Cities for Financial Empowerment Fund, and you can find a Financial Empowerment Center close to you. Or you can contact me and I can help you find them. So we're going to start with understanding credit. And yeah, there were a lot of good points Deborah made. I don't really know if it's better to have no credit or bad credit. Part of me feels like maybe bad credit, because then you know where to go, what to do to fix it. But no credit is also, a clean slate. So it's really hard to say. But this is kind of what we're going to cover. We're going to define credit. What is the cost of credit? Again, talking about bad credit and no credit and what that means. Reading a credit report. Those are hard to do. And so the Financial Empowerment Center can help you understand and navigate that a little bit, improving your credit score and next steps. So, what is credit? Credit is a promise to someone that you can walk away with a product now and you will pay for it later. And that seems like, oh yeah, obviously, but like, a lot of people don't understand that. And the idea here is that you will pay them later, but you will also pay that interest too, that pay that extra for um, the use of it now. So credit is not extra money. A lot of people do tend to use credit cards and loans and stuff like that as extra money, with the idea that it's not going to need payback or it doesn't gather interest. Credit is necessary in our world. If you want to do anything, if you want to buy a house, buy a car, buy furniture, anything, you're going to need credit. You can only do so much with like the stash of cash under your bed, and then you need to establish credit. It's not only for just buying homes and cars. It is, some people require it for employment. And as you'll see right now, we're talking about small businesses and starting small businesses. So it is absolutely necessary, because if you have not established a small business yet, they are going to rely 100% on your personal credit score to give you a small business loan. It's not as confusing as you think. It just takes a little bit of time, spend a little bit of time with it, and you can absolutely understand it. And it shouldn't be like, you should really like know what's going on with it. There's a lot of, thinking like, oh, that's above my purview or whatever, but it's not. You should absolutely know what's going on with your credit. It can be helpful for large purchases. It can be established over time, give you access to better credit, and better prices, and needed to get a job or rent an apartment sometimes, and should be reviewed annually. Fun fact, and I don't know if you know this, but all the credit bureaus have decided that you now can review your credit score weekly without getting punished or penalized. So you can go in and look at your credit score weekly, and it's not annually anymore, and that's a nice thing, right? Especially right now, when we're all struggling a little bit. There's two types of credit. There's secured and unsecured. And it's probably intuitive which one's which. Secured is given by a lender when you put something up for collateral. So you are securing it by saying, okay, if I don't pay, then you're going to take my car, or you're take my house, or whatever, or this person, maybe it's a cosigner, this person will pay you. So that's a secured credit. It doesn't fluctuate, so it's always set. So, like your car payment is always like $600 a month. Well, I don't know. I don't know what car payments are anymore, but your car payment is always one thing every month, because it does not fluctuate. There's nothing added. So it's not compound interest, right? It's just simple interest. They take the interest, add it, and then you pay a monthly fee. It's less risk to the lender because they've got some collateral that they're going to come and possess if you don't pay. Obviously, failure to pay will result in seizure, and mostly it's auto loans, mortgages, and home equity loans. Unsecured is credit cards, right? So the interest rate fluctuates. It's not backed by any sort of collateral. Lenders can gauge credit worthiness, and so they gauge your credit worthiness, and there's a couple ways. One is the 5 C's, and I think I have it on here. But they'll gauge your credit worthiness and then decide whether to give you the credit card or the loan or whatever, based on that, and they'll decide the APR rate, or the annual percentage rate, and also the amount, based on your credit worthiness. So that's where your credit score comes into play, right? So if you are applying for a loan, then and your credit score is bad, you're going to get a terrible you're going to get a terrible rate and may not get as much as you want. Failure to pay can result in late fees, which can cost more, and then eventually maybe goes into court hearings and being taken to court.
Amber, on a secured credit, like a car loan or a mortgage, it's often that there are two names on there. So, maybe a recent college graduate has a parent on their car loan, but they're doing the payments. Is that enough to establish credit if you're a co-signer of a secured debt?
Um, if you're a co-signer of a secured debt, I don't. I think you need to be the primary in order to establish credit. If you are a co-signer and don't have any credit, I don't know that you would be a viable co-signer.
I got it.
They would want somebody who has credit, who has, credit worthiness, so that they could pay back.
If it was in your name, but they were the guarantor, so you were still primary, that would work, right?
Yes, absolutely. So if you're like the primary person taking out that loan, and then you have a co-signer with a good credit score, that would establish credit.
And it would also work if it was like two partners or spouses who owned a house. As long as your both names are both on the mortgage, that will help establish your credit too, right?
Yes, but be careful, because it can establish credit in both ways.
That's right. Okay.
Yeah. So just if you're co-signing, co-signers, it will affect your credit score if you co-sign for a loan.
So if you co-sign for your son's loan and then he defaults, that's going to hurt you too. So watch out. Okay.
Yeah. So just be careful who you do that with, and trust them, and know that that's a possibility. So, and I wouldn't. It's also going to affect your credit score for the amount that you take out. So the amount of the loan you take out will take down your credit score for a bit. So it will do that as well when they first take out the loan. So just beware. Don't be in the market for a big purchase if you're going to co-sign for somebody. Okay. So some ways that will raise your credit score. So this is basically the cost of credit, right? So interest is real. Right now, our interest rates are really high, and it depends on which part you're looking at. If you have a savings account that's accruing interest, then that's a great thing, right? Interest rates are at 4.85%. So you're getting 5% on all your savings. So it's a great thing for savings and stuff like that. It is a bad thing if you're trying to buy a car or taking out a new credit card or something like that. So it just depends on which way you're looking at it. But anyways, this kind of breaks it down, and I know it seems simple, but like sometimes it's really good to just look at it simply. $5,000 for a loan for 2 years. If your interest rate is 25%, you're paying almost an extra $3,000 in 2 years. So that's a lot, right? And so your credit score can bring that down, so that you don't. If you have a terrible credit score, the banks are probably going to still. Some of the banks, there's some that won't, but some of the banks will still lend you money, but they will make your interest rate 25%, 29%, 30%, so that you are paying top dollar for this loan. So the lower you can get your credit score before you take out that loan, the better your rate will be, and then the less you'll have to pay on that loan. So bad credit, it can raise the interest rate, can cause denial, and increase the amount of service fees. So there's no limit to really what lenders can do if you have bad credit. They know you're desperate, and if you're coming to them with a bad credit score, they'll take advantage of that, and that's the sad thing, No credit, you can't buy a house or car. You can if you have cash. If you want to slap down hundreds of thousands of dollars in cash for a house, then you can buy a house. But but also there are sometimes when they will not accept cash, and that is, I think, becoming more and more prevalent, is they are not going to accept like just a bundle of cash. So if you don't have any credit to, you're not going to be able to get utilities in your name. So you might be able to buy the house, but you can't turn on the gas. So that's a good thing to keep in mind. As far as like bad credit versus good credit, we talk about establishing good credit. Like a home, like a mortgage, is supposed to be good credit, and a credit card is bad credit, or bad debt. Like good debt versus bad debt, basically. And to me, all debt is debt, right? It's debt. So it's not good or bad. It's serving a purpose, and that's all you got to think about it as. Your credit card, your mortgage, you're gonna have to pay them all back. So credit or debt is debt, but it helps you establish credit.
Well, and Amber, I know that there's a school of thought, especially with small business owners who may have inherited a business from a parent or something, that don't ever borrow, right? Debt is bad.
Right.
And the answer is, you don't have to borrow a lot, but if you need it and you can't get it, then you're going to be in a very powerless position, because you won't be fundable.
Right. Exactly. And thinking, there are people who are like, tout that I've never had to take out a credit card. It's like, well, good for you, but now you don't have any credit, and now now you may be stuck if you want to, buy this house or do this thing, and you don't have credit established. So responsible borrowing is always the answer.
Yeah, and you can always, pay it off every month. It's not like you have
Mm-hmm.
to owe money and pay interest rates. But
Absolutely.
the reality is, this is one of the things we come up with for our entrepreneurs, is that if you got an offer, like a purchase order from somebody for a giant order, and you can't buy the raw materials, you can't hire the staff to make good on that order, and you go to your bank and you don't have a line of credit established, and they don't know who you are because you have no credit history, that really puts you at a disadvantage in terms of building your business. So
Yep.
this is why we talk about your personal credit, because you may think, I'm going to run my business on a cash basis, I don't need to borrow. You want to be able to borrow if you need
Absolutely, yeah, and that's even more critical than just your average Joe, because you can decide to put off buying a house or whatever, but if you get that surprise huge order, and you're stuck, that's business that you've just lost, and credibility and stuff. So it's always a good idea to just keep your credit score pretty decent. And we'll get into what I mean by decent too right now. So credit scores and credit reports. Reports are the document that you read, and details every line of credit that you've taken out. It really is exclusive. It will go back to your very first credit card or loan or whatever. Sometimes, and this is why it's really good to always read your credit card or credit report, is sometimes because I found out that thankfully this was okay, but my father established credit for me when I was 3 years old. 3 years old. And it worked out because I have excellent credit now, because I have such a huge credit history, but that probably wasn't great. But that's always good to just look at it.
Tell me why he was establishing credit in your name at 3.
I have no idea. I don't talk to him anymore, so I'm not entirely sure.
Those two things might be related. Okay.
Yeah, I never got to ask him, but yeah, I was like, oh, I took out my first credit card at 3. That's impressive. So yeah, so there's tons of things. There's mistakes on there all the time, and you want to get those cleared up before anybody else gets a hold of it and tries to read it and does a hard pull, and it's like, nope, and then you've got that mark on your credit score. Bad information stays on for 7 years. Good information will stay on forever. So, if you do default on a loan, or something happens with a credit card, you got 7, or if you do declare bankruptcy, seven-ish years, and then it will fall off your credit report, and then it won't show up anymore. They have just made the ruling that medical debt under 500 $500 will fall off your credit report also, in 7 years. So that's nice to know as well. Your credit score is a grade rating relative to your credit worthiness. So when we get to talking about, there's so much that goes into credit worthiness, but basically, it has to do with like your ability to repay, your credit history, your amount of loans that you currently have, your collateral or capital that you have. So it takes all that into consideration, and then they look at all that and then decide whether you you have what your score is. So on your credit report, you'll find mortgages, installment loans, student loans, auto loans, personal loans, revolving credit, which are credit cards, and collections accounts. So if anybody has, turned over your account to a collections agency, you will find that on there. What's not on your credit report is utilities, your rent, and anything like groceries and stuff like that. Fun fact about your student loans is that it will always be on your credit report. So you can't like declare bankruptcy or anything like that, and your student loans will never disappear. Never disappear. So that's fun. And I know we are coming up on we're counting down the hours until we all have to start paying our student loans back. If anybody has that problem, the FEC, I know this isn't about that, but the FEC can help you navigate that too. So how to check your credit report? Only use annualcreditreport.com or these phone numbers or that address. If anything else is popping up on your window, they're probably going to charge you a fee, and you don't have to pay to see your credit report.
Amber, my credit card company sends me a note that one of my credit score has changed. That's not the same thing, right?
That is like usually through like Credit Karma or one of those like Credit Sesame or whatever. We don't recommend those companies just because they sell your data. And so this one's right through the 3 credit bureaus. It's straight
yeah. The thing that confuses me is I don't know where my credit card company got it from. It just shows up like, ooh, Deborah, your credit score increased this week, and it's like
that's another thing. They may not be taking into consideration all 3 bureaus. It might just be like one of the bureaus. So looking at your credit report from annualcreditreport.com is your actual credit report. Those ones will give you a rough estimate. Like you can get the idea that your credit report is somewhere in 720, but this one will be the actual accurate one if you need like a specific number. But it's good to like have those. I mean I have that too, like on my Chase it pops up in the corner and it's like, oh, you, and it's like nice, it's like, oh, okay, I can kind of keep an eye on it. But if you really want to get down to the nitty gritty, like the annualcreditreport.com, and then they'll send you the report and then you can look over it. Which is fun. Yeah. So, like I said, don't feel the need to pay to get your credit report, especially now because you can look at it weekly. So you don't need to pay anybody to see your credit report. And like I said, those credit score companies out there, Credit Karma, Credit Sesame, they will sell your data.
And the other thing, I think you mentioned this before, is it used to be that your credit score could decrease if there were too many inquiries against it. including yourself.
Yes.
That's not
Yes.
true anymore. Is that right?
Yes, it is. Well, it is to a point. So there's what they call a hard pull and a soft pull. And previously, historically, they would let you do one pull a year without it affecting your credit score. Now they're letting you do one pull a week without it affecting your credit score. So,
I guess I don't understand why inquiring about my credit score should ever have an impact on it. It's like ask shouldn't change it, but it did for years and years, right?
this is a flawed system, I will say. It is not very old. It is like less than 50 years old, I think. I can't remember the exact date, but it is not the greatest, most equitable system out there. Or it's the only system out there, but it's not the most equitable system. So there are some things, and I don't know why, but that is one of them, that you can't keep pulling your credit report.
Okay. The other thing, and I think you talk about it in an upcoming slide, is that there's a space in credit scores where you're good enough, and that making it way better doesn't help. Like you need to be in a certain range um,
Yes.
to be fundable at
Mm-hmm.
the attractive rates, and getting how high does it go? 850 or something?
Yeah, 850.
Right.
That well, the FICO goes to 850.
Right. So a FICO goes to 850, but you might not get a better rate at 802 than you get at 848. If you're over 800, you're over 800, right? Something
Yeah,
like that.
yeah, that is.
We're not necessarily aiming for perfection here. It doesn't make
No.
that much of a difference.
You don't need to work that hard. No. And that is amazing. If you have over 800, like everyone would be blown away by that. They'd be like,
I
"Holy."
just picked numbers.
Yeah,
Sorry.
no, it's great. Like, but yeah, you can get it to a point. Like, I think mine fluctuates between like 730 and 760. And I have decent rates. Like I get decent interest rates, and so it doesn't have to be perfect. And I think a lot of people are so like laser focused on getting it the highest they can, but they don't. You don't have to do that. You can, calm down a little bit and relax a little. So if you can get it in the 670s, you can get a decent rate, most of the time. Um, so yeah. Um, Also, I just want to say, and I did I have our PowerPoint here. Just I wanted to say a word or two about scam. Oops, now it started all over. Okay, hang on. About scams, because one of the worst ones we see is it froze. Um, of course. Um, One of the worst ones we see is people paying others to do work on their credit score. Um, so I just want to say, like, don't ever pay anybody to fix your credit score. They're not going to do it any faster than you can. They don't have any tricks that you. I don't know what's going on here. They don't have any tricks that you don't know right now, or you won't know after this presentation. Um, okay, it's not gonna. I'll just. Oh, whoops. Okay, so don't pay anybody to fix your credit score, ever. If you need help, if you need advice or anything, call an FEC, call us. We will help you navigate that. And this is just generally speaking about scams and frauds. We're seeing a ton of people calling us saying they've been victims of a fraud or scams. You don't really have to provide your personal information to anybody. If somebody calls you up and is like, "What's your social security number?" You'd be like, "I don't want to give it to you. Send me a letter." Prove that who you are is who you are, basically. there should be written documentation of any legal issues. So if the IRS or somebody calls you and says, you know, you need to pay us $5,000 because you're late on back taxes or whatever, be like, no, I need documentation. Send it over. You know, email it to me, send it to me in a letter. Like, send me the documentation. Same with any kind of like lender. If your credit, like if your loan went to a debt collector, they need to provide documentation before you pay.
Yeah, I think that one of the things they do is they take advantage of you by calling you and rattling you and making you feel there's this fake sense of urgency to see if they can get you to, you know, Venmo them some money or go buy gift cards or all kinds of things. But the reality is this stuff takes time, and asking for documentation and having it sent to you in plain old snail mail so you know who it came from and you can do your verification. And this goes back to what I said before I even introduced Amber, which is, if someone's offering you help, make sure you understand who it is that's offering you help and what their motivations are, because there are individual credit counselors who will take a percentage of whatever they save you. And that's probably not who you want to work with, but they'll make it seem like they're going to make all your problems go away with a magic wand. Know who you're talking to.
Absolutely. And we, like I said, our services are 100% free. We never charge anybody. They're always free. And we are professionals, certified credit counselors. So, and that's the model is the same across the country. So
can you go back to in your other deck?
Yep.
You were on the thing with the credit reports, which scared the crap out of me. I don't know if everyone else felt the same way. It's like, wow, there's so much information here. How do I make sense of that?
Did it go back now? Oh no. It's doing something weird. I don't.
Just find the slide and then do a view.
Yeah. I tried to do that and then it said.
You went by it. There you go.
Yeah. And then I presented.
Do a view.
View?
Under the view menu up at the top, view.
Okay.
It should be view slideshow. Is that not one of your choices?
Normal? No, I don't see it. No,
Slideshow's up at the top. 2 over from view.
Slideshow right
okay.
there. From current slide.
There we go. Okay. Okay. Yeah. Yeah. So these are credit reports. So they're blurry and they're hard to see, but this is basically what you're facing when you get your credit report. And so you can't really see. I think I might have no.
Don't worry.
But yeah, I think I had a slide that was a blow up of this, and you can see like every month, you know, and it has like an indication of whether you paid on time or whether it was late or whether it was in default or whatever, you know, and you gotta check it, you know, unfortunately, because they make mistakes, and this is, as you can see, it's convoluted. Every bureau has their own system. This is TransUnion. These are the 3 bureaus. So this is TransUnion. I think this is Experian. In the middle is Equifax. So they all have their own system. They all have their own way of reporting. So they all have their own shorthand. So you got to look over them and make sure that everything's correct on there, because that could affect your credit score. It's also a good idea, just generally, I just keep my credit reports frozen, my credit's frozen. So go on each one of these and freeze your credit. And that way nobody can open a credit card or open anything in your name. So it's always a good idea to just go and just freeze it. You can unfreeze it anytime you want. It's no big deal. It's pretty much like happens instantaneously, but it's just safer to have your credit frozen.
Yeah, you know how when you're doing the checkout at TJ Maxx and they ask if you want a TJX rewards card, it stops, you know, the stranger in front of you from opening a credit card in your name and charging their $1,000 order to you. So it's so much safer. We've had somebody try to do that. I mean, it was years ago. So we have a freeze on all of these. It's totally the right thing to do.
And it's not hard. It's really not hard. So that is definitely the way to go. When you come to the Financial Empowerment Center, we use Experian. And we do what is called a soft pull that does not affect your credit score. Um, and we can read over it line by line, show you what's going on, where, the counselors are very good at deciphering these. So that is an option. Okay, how do you improve it? There's 5 factors of FICO. 5 factors of FICO. So basically, it's payment history, amounts of how much you owe, new lines of credit, length of credit, and a mix of credit. So you can see payment history right here is 35%. That is 35% of your score is payment history. So anyone's like, how do I improve my credit? Pay all of your bills on time. It's that easy, honestly. Do that for 3 or 4 or 5 months, and you will see your credit score pop up there. But yeah, it's that easy. The other thing that's big is these amounts owed. So 30% is amounts owed. So your credit usage should be below 30% of the total allotted amount. So if a credit card is giving you $33,000 on your credit card credit line, you should never use over 1,000, because that's under 30%, and that will keep your credit score high, to keep that low. So if you're like, oh crap, I never knew that, all of my credit cards are almost maxed out, no problem, just get them under 30%, and you will see your credit score improve. As you can see, credit mix and new lines of credit aren't very don't really matter in this mix very, very highly. They're only like 10% each, so I wouldn't focus on those as much. Payment history and amounts owed is really your bread and butter, and where you're going to see the biggest progress as you take care of that. And then length of credit history, there's not really much you can do about that at this point. Like Deborah said, just start. If you don't have any credit established, start now. Get a credit card. There are secured credit cards out there that you can get that are great. I don't know them, but I can easily find them and look them up for you. But yeah, just start establishing credit. So there's 2 types of credit scorers. There's the FICO, and then there's the Vantage. You can see here this, the green is very good. So this is 8 to 850. This is still very good. This is 740 to 800 or 899. And even this is good, 670 to 739. So that range will still get you a decent loan, decent price, or decent interest on your loan, decent rate on your loan. There we go. So yeah, here's just some of the things. We have 3 different credit bureaus that have 3 different scoring ways to score, 2 different scoring systems, codes in the trade lines that require a key to understand, unreliable reporting, and all the bills you pay do not count towards your credit score. But those bills can also go to collections. So if they go to collections, then they do count to your credit score. So it is, it's a tough system to navigate, but it is navigatable and it is worth it. So, again, this is how you raise your credit score, right? Consistent on-time payments.
Amber, I want to make sure we have time for questions, but let me ask you.
Oh yeah, I'm sorry.
No, don't close unused credit cards. Why not?
That will actually bring your credit score down, because it is credit history. So if you close,
so when you close it, even though you're not using it, it's showing that you have no debt on it. So that's good.
Yeah. So just keep it open, keep it active. Make sure you're checking for like annual fees and stuff, because those will sneak up on you, and then then they'll pay. Then they'll charge you $3, and then you owe interest on that $3, and then it ends up being $20, and so they're sneaky. But yeah, it's recommended to not close them.
Okay, Amanda. Yes, we will send you a copy of the deck. So no worries.
Yep. And then this is just the Financial Empowerment Center in Pittsburgh. You can always visit us. I understand that you all are from different parts of the parts of the country, but if you call me, I can navigate you to the correct Financial Empowerment Center. So, yeah.
All right, I'm going to stop recording because a couple people have asked me